speak out. But I think one Q becomes very critical to assess the impact of that COVID and makes it very difficult for the street to predict how much non-performing loans will be formed. So as RBI numbers show, the larger borrowers are pretty much contained at 1%, but we do expect that quarter-on-quarter we will see higher stress formation across the board, and within the banks, the larger banks are better placed than the smaller ones.
Shakira, Global Intelligence, thank you. Still to come on the show, we'll discuss the tussle between the bond market and the RBI on yields. That's next. The former RBI Deputy Governor Ramasubramanian Gandhi. This is the
People ask me all the time, what is the key to being a really good investor? I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
You should never invest in something that can't be simplistically explained to you. The very, very good investment advisors can take complex matters and make them very simple.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
In the markets, opening about half a minute ago, there we go, that's what it looks like at the moment, following the regional trend on the way down. To tell you at the moment, if you look at the Nifty, the mix is certainly not showing any market base, it's showing market breadth to the downside. HDFC Bank, we've been talking about this one as it missed estimates, 2.9% lower. We're looking at something like this, 7 stocks up 42, now 44. On the way down. So we have the biggest loser on the market at the moment in terms of its market cap is HDFC. Let's have a look at what's going on with the economy there in India and bring in our next guest, R. Gandhi, who was a Deputy Governor of the Reserve Bank of India from 2014 to 2017 and currently a financial sector policy expert and advisor. Thank you so much for joining us, Gandhi. Let's have a look at what you're making of this tussle between what the bond market is saying to the RBI and what the RBI's remit is fundamentally, and the stresses and strains there.
Thank you. First of all, I see it as a standard tension between market participants and the monetary policy authority, especially when the views differ from both sides. This is nothing to be surprised about or to be overly concerned about. Market is thinking that excess supply of GSEC in the current fiscal year due to large market drawing program by the government and the large fiscal deficit. Along with that, the recent inflation footprints, the higher level of inflation crossing the upper boundary of the corridor. Based on this, market is expecting that monetary policy should be tight, whereas the Reserve Bank and the Monetary Policy Authorities, Monetary Policy Committee, they see it from their perspective in the sense that, first of all, the accommodative stance on liquidity, and that is committed for the entire fiscal year. With that, they expect that market borrowing program should go through smoothly without disturbing the yield. And the recent elevated inflation is also in their analysis. It is due to temporary supply side shocks, more specifically because of the second wave in of the COVID lockdown. So that is why Reserve Bank is not very much concerned about the immediate increase in the inflation rates. But not only that, the Reserve Bank is also following up its belief with words and action. Governor has explicitly spoken about it, and also through auction developments, Reserve Bank is sending a strong message. Yes, please.
I would just keep it a bit briefer if we can. Just looking at, you're saying the RBI should be looking at inflation, short-term inflation at least at the moment. That's basically what people are suggesting right now. They need to be concentrating on the economy and economic growth. Are they doing the right thing?
Yes, sir. Inflation, the current assessment is that it is because of the temporary factors. I did mention now that the economy has been reopened again. The supply side constraints should be removed. So that way inflation will be back into the normal trajectory as per the projection by the Reserve Bank of India. And as regards to growth, yes, is it likely to be overheating the economy because of the robust growth prospects that everybody is expecting? I believe that it is unlikely because unutilized capacity is still large in the economy, low credit growth is there, and so the consumption and demands are still at a subdued level. That's why inflationary trajectory is likely to be downward sloping because of the growth, expected growth.
So, given that consumption remains sluggish, what do you think can be done by the government, by perhaps even the RBI, to revive demand?
Yes, consumption is basically a function of income and certainties. So policy certainties will always be conducive for discretionary spending to be in place. And the fiscal policy should be targeting more towards leaving more money in the hands of those who will consume. That is bottom of the pyramid type. And that's what the current government is targeting with the targeted subsidies, Manrega allocation, and the like are the right choices which the government has chosen. And for discretionary spending, yes, obviously, currently because of the last year COVID situation, a lot of uncertainties were there. Safety first attitude was in the hands of the people who have money, but to encourage them to spend more, policy should aim to bring in that certainty on income generation growth. So to that extent, whereby the current policy environment is moving towards that, so I would believe that consumption should pick up in the days to come.
Oil front and center easing today but remains elevated. Will that hurt India's recovery story?
Sorry, I didn't get the question.
Elevated oil prices, are you concerned about it? Will it impact India's growth?
Elevated oil prices or inflation?
Oil.
Yes, oil prices have always been worried with respect to Indian economy. So the recent prices is certainly as a matter of concern. Even the Reserve Bank's monetary policy report, which has shown the oil prices to be around $65, today it is 70 plus. So to that extent, the fuel price increase is a concern. But is it going to be affecting the inflation too much? The assessment says that about 10% increase will be on the inflation. Its impact will be something like 30 basis point. So I think that it will be a manageable proposition. It is not going to be disturbing the record too much.
Gandhi, thank you for joining us. Former Reserve Bank of India Governor R. Gandhi there. Now we had those HDFC numbers and market reacting to those in India as we see a big downdraft taking place. You can see 2.5% down for HDFC Bank. It's making itself felt with some of these other ones as well. Look at, for instance, there, Kotak Mahindra over 1% down, ICICI as well. That's what we got with Indian banks. Let's have a look at what else is going on after the break. This is the break.
Bloomberg surveillance puts global markets into perspective.
Data, the manufacturing data.
How the market responds will be really interesting.
Timely conversations.
Part of getting out of this hole is big fiscal.
Keeping you up to date on trends. When do you take this thing off?
So you put it on to take it back off.
Wake up with Tom Keene, Jonathan Ferro, and Lisa Abramowitz. Weekday mornings on Bloomberg Television.
Countries that have higher vaccination rates, hospitalizations are lower because even though vaccinated people can get the Delta variant, and the Delta variant has been reported to be more dangerous, if you're vaccinated, your disease is likely to be less severe.
A quick check of the latest business flash headlines. Asahi, the maker of controversial Alzheimer's drug Aduhelm, says it stands behind the US FDA's approval of the medication. The Japanese company says its focus on promoting the drug is developed with Biogen at medical institutions and providing access to patients. Shares fell last week after two major US hospital systems and a group of health insurers declined to administer the medication. TSMC's founder has warned that efforts to build domestic chip supply chains push up costs and still fail to achieve self-sufficiency. Speaking of Taiwan's envoy to the APEC forum, Morris Chan raised doubts about the ability of governments to develop entirely self-sufficient semiconductor industries. He said free trade has boosted chip technology and remains the best system to fulfill global demand. The Australian government and Telstra have teamed up with a $2 billion Aussie bid for Digicel, which controls telecommunication assets throughout the Pacific Islands. Local media report the government would stump up about 3/4 of the money and Digicel's billionaire owner would remain on the board. The deal is seen as a way of keeping telco assets in the Pacific out of Chinese hands.
Right, so what we've got coming up later today right here on Bloomberg London, Mayor Sadiq Khan joining the surveillance team. That's as the United Kingdom lifts all restrictions and celebrates so-called Freedom Day. But COVID is surging and serious doubts do remain. And from lifting curbs to lift off. Then it's our space race coverage on Tuesday. Jeff Bezos launches into orbit on his Blue Origin rocket. That is from 8:30 p.m. Hong Kong time. Well, a quick one on the markets. Let's have a check on what's happening with regards to these benchmarks, which are under some serious pressure. We're going into the lunch break here in Hong Kong with tech and banks very much at the fore. Seeing 1 2/3 of 1% decline, though I have to say we are off the lows of the day. Nikkei is also under pressure after lunch, remains that way as well. US futures also on the way down, concerns about the impact of COVID outbreaks and also elevated inflation and what that may well do to economic prospects. Taking a look at crude, 1.2% down for Brent, 1.2%, near 1.2% down for WTI there as well. And that as OPEC Plus agreed to settle their differences. Those are basically Saudi Arabia versus the United Arab Emirates, and we've got a deal on the table. And as a result, we're seeing oil prices just stabilize and go down a fraction. Got these futures contracts as well, suggesting that Europe could also be seeing some negative spirits, as it were. We'll have details on the way on that. This is Bloomberg.